if I were running the Fed today, I would raise interest rates a full point. I think that the credibility of the Fed has been significantly damaged. The Fed is supposed to be independent of politics. How many times do we have to play this same game where the Fed keeps falling behind the reality? We have overstimulated the economy by a big factor. We have to take the punch bowl away. And we also have to recognize the fact that when you're raising rates by a point, when you're starting at 1.5 and going to 2.5 or something like that, that's really not very much. It may be percentage-wise, but I think there's more than enough room within the economy to absorb a couple hundred point basis increase.
On Wednesday, the U.S. Federal Reserve raised its benchmark interest rates by 0.75 percentage points to 1.5% to 1.75%, the highest level since March 2020. Fed Chairman Jerome Powell also said there would be another 75 or 50 basis point hike in July. Members of the Federal Open Market Committee now expect the benchmark rate to end the year at 3.4%, 1.5 percentage points higher than they had estimated in March. Despite this being the most aggressive interest rate hike since 1994, some market experts and analysts believe the Federal Reserve should have raised the interest rate by a full percentage point. In an interview, Zell pointed out that policy changes and increased spending on the part of the federal government are what brought the economy to its current state. He believes that more drastic actions are needed now if we want to see any significant changes. Zell reacted to the idea that the Federal Reserve can't do much to control inflation because of existing supply chain issues. He also spoke about expensive legislation and the general reaction of investors to the economic downturn. Please watch, like, and share the video. Remember to drop your comments about Zell's interview in the comments section below and subscribe to the channel. Let's dive right in.
The problems in the economy right now aren't really things that the Fed is very equipped to fix. A lot of these are supply issues. The Fed can really only break on the demand side of things.
But the Fed controls demand. I mean, the reality is that, I've been around for a long time. A piece of legislation used to include, $100 million or 200 million, and then all of a sudden it became trillions. And all of a sudden we couldn't get the money out fast enough. I think the whole country owes Joe Manchin a giant thank you for stopping what would have really been a catastrophic result.
You mean in terms of additional spending coming from Washington?
And that whole Buy Back Better bullshit is just unacceptable. And unfortunately, we only had one senator who stepped up to the line when, in fact, everybody should have stepped up and recognized that this was a disastrous policy.
Are the higher interest rates starting to get to the point where it slows things down in commercial real estate? We've watched it in residential slow down somewhat.
I think that what you're seeing right now is a lack of confidence. I don't think that the rates that have been increased to date change much. It's the anticipation that changes. So we're seeing a lot of commercial transactions being put on hold. You're looking at the cost of financing is up 80%, and it's not only up 80%, it looks like it'll be up more than 80% because rates are going to continue to go up. So, everybody, wants to make decisions predicated upon, well, what happened, in the past. And I think right now the focus is what's going to happen in the future. And I think that's materially impacting the confidence of people to go forward. So I would envision that at least for the near term, and the near term is the next 6 months, I would think that real estate transactions will be lower, and the deals that get done will get done because of conviction, and people will defer and say, I can wait till next year.
Inflation has not been this high since 1980 when James Carter was a United States president. Zell, an octogenarian, compares the blame game of that period to what the Biden administration is currently doing.
Accept themselves. And in the same manner, Joe Biden owns this inflation. If he hadn't, provided and encouraged the massive amounts of liquidity that was added to the system under the guise of COVID, we wouldn't have this problem today. And blaming the oil companies this week and blaming somebody else next week, all doesn't avoid the reality that the real blame here is on policy or lack thereof.
The stock market is now in a bear market. The S&P index has slipped below $4,000 and is currently trading at $3,674.08, a 8% decline within the past week. Year to date, the index has lost around 23.55% of its value. The Nasdaq has also lost around 11% of its value in the past month, at 32.03% year to date. What do you think about Sam Zell's interview and his outlook on the U.S. financial markets? Please drop your comments, thoughts, and observations in the comments section below. That's all for today. If you like this video, please give it a thumbs up. And if you want to hear more videos from our channel, subscribe and make sure to turn on the bell icon.